Thanks so much for joining me
Of
on the
course.
podcast. This is an exciting one. I've kind of alluded to this a few times, that this is one I was excited to kick the year off with. Just to give a brief introduction, everybody knows the bio is going to be linked in the notes and in the email that's being sent out. But Samuel McClellan, a CFA and vice president, he's a product strategist for the fundamental equity sector and Megatrends team with BlackRock. He covers technology, health sciences, U.S. domiciled natural resources strategies, and he's responsible for providing the link between investment teams and all client groups, and for providing insights for the firm's active equities product platform. Sam, is there anything that you wanted to add to that rundown?
No, that's a a good summary of kind of my responsibilities today. My experience at BlackRock spans across a couple of different businesses. As you mentioned, I'm on the fundamental equity team right now, which is our active equity strategy, and I've also have spent a number of years within iShares and in our Latin business as well, which is our technology service that we offer to external clients. But yeah, thanks for having me, Jordan. Definitely excited about this conversation. Have enjoyed speaking with you in prior occasions as well, and excited to kick it off talking about thematic investing.
Yeah, so I guess that's a great place to start out. I'm sure that a lot of the people tuning into the call right now can kind of piece together what thematic investing is, but can you go ahead and give us your definition for what thematic investing entails?
Absolutely. So for us, investing along thematic lines is really about cutting across sectors, geographies, and market cap profiles of companies, and really looking at the companies that are benefiting from global structural change in the economy. So, as I mentioned, across sectors, across geographies, large, small, mid, looking at those kind of companies that are going to benefit from trends that are going to exist regardless of what happens with business cycles, regardless of what happens with macro events. So we've identified 5 of those trends, what we call megatrends, and I'll list them here. The first is demographic change, right? So really the aging of society. This is something, again, that's going to happen regardless of what we see in terms of business cycles, and it's going to happen across the globe, right? There's less babies being born, and we're living longer and longer lives. It's going to have massive demographic impact to the economy. We also have rapid urbanization. More and more people moving from rural environments to the city. Sometimes in the U.S. It can be understated, but if you look at urbanization across the globe, about 75% of it is actually happening in emerging markets. There's still 3 billion people in the world that have never used the internet. So you can imagine the type of growth that's still to be had. You can imagine a world, things are going to change as more and more people move to the cities, right? We need different things, we're going to spend our money in different ways. One day cars might actually be obsolete as the world becomes more and more urban and centered around big cities. We also have the shift in economic power that's taking place. There's a change in power dynamics across countries. There's a rise of the middle class, especially in China and India. India and China both, each in their respective rights, are set to rival the U.S. in terms of GDP by 2050. China even sooner than that. They're really on path right now to taking over as the #1 economic power by 2030. And so we see this sphere of influence moving, and this is leading to risks, opportunities across the spectrum. You also have technological breakthrough. Obviously what we've seen over the past 20, 30 years is amazing. I think sometimes people don't realize that we're in a very special moment in history when you see the type of innovation that's taken place and just the explosion in technological capability. And then you have climate change. It's unfortunate, but the future that we're going to live in over the coming decades is going to see more and more extreme weather events, floods, crop failures, fires. I'm here in California, right outside of San Francisco, and 4 out of the past 5 years, we've had fire seasons that have continually to get worse and worse. This past year wasn't quite so bad, but we saw in 2020, 2019, just historic levels of fire. You can see energy price surges like you've seen over the past few months. Look at what's happening in Kazakhstan. You can tie that down to the changes in climate and all of the ripple-on effects that has. So again, across sectors, this is happening everywhere, across economies and across all types of companies. These changes are going to affect. And so thematic investing is really, again, investing in the companies that will benefit, and the companies that will embrace these changes will outperform, in our view, those who aren't necessarily taking these into account. And so it's not a new concept by any means. People have been investing in themes and trends for as long as investing has existed. But what is new are funds dedicated to the space, to thematic funds. And we've seen, over the past 5 years, about $800 billion of inflow into the category. And so, seeing funds that are explicitly getting exposed to themes is something that we've seen. But again, we've seen this type of investing, for decades, if not centuries.
So we're going to spend plenty of time today drilling down onto some of the specific examples of ways to play thematic investing. But I want to keep it high level to start out with. And if we just go, oh God, I thought about the pun ahead of time, the theme of thematic investing, would you consider it long-term by nature? Is there any sort of tactical or strategic mode to it? Or is it really just, you have to play these trends for the long term based on just what thematic investing entails?
Yeah, it's a good question. I mean, I'd imagine there's somebody out there. There's going to be some investors out there that are using thematic funds in a tactical portfolio and using them as instruments to make tactical bets. I'm sure that exists, but really thematic investing is long term. It's really about long term thinking. These are multi-year, multi-decade trends that fall into this category. It's not a short-term thing, right? Take EV, electric vehicles as an example, right? We moved from 4% penetration, global penetration in terms of the percent of cars that sold globally that were EVs in 2020 to 7% in 2021. We think it's going to 50% and above over the next 10 years. So if it's going to 50% by 2030 in the US at least, is it going to make a difference if 2022 is 7% or 9%? Is it going to change your views and your, the way that you see reality? Is it going to change the theme? It's really not a short-term thing. These are long-term trends. And obviously, all investors need to take into account new developments and things that happen. But, in terms of thematic investing for the short term, to me, short-termism and thematics, it just kind of sound silly together.
We're definitely going to circle back and touch on that a little bit more, especially based on what we've been seeing in certain pockets of the market over the past 12 months or so. But I want to continue on here. I guess it's going to be a similar question about the nature of thematic investing, active versus passive. Is it always going to be passive management where you're just buying an index and letting it bake for X amount of years? Is it always going to be active where you're picking certain stocks that have the most profound exposure to certain areas that you like, or some sort of combination?
Yeah, I think there's definitely room for both, right? So thematic investing, definitely, across the spectrum, there's passive, there's active. There's a ton of ETFs out there that track very nuanced indices. So some of this has to do with the advance in technology around creating indices and investing. There's themes out there. There's ETFs, passive ETFs for robotics, genomics. There's water ETFs. There's lithium ETFs, and then they can get these very nuanced views expressed through passive ETFs. And then there's active as well, right? There's active And this is more where I say that I say thematic investing has existed for a long time. That's more in the active sense, right? Active managers have been doing this for a while. Technology investors, healthcare investors, investors in sustainable energy. These are all, areas that really favor specialized professional investors with expertise, right? So bottom-up type fundamental analysis. It can take a high level of expertise to generate alpha in these areas, and so there's definitely a room for active as well as passive.
And this will be kind of the last high-level question, but you just touched on it. Some of the metrics that you could potentially look at in thematic investing, is it a lot more qualitative than quantitative? You mentioned fundamental bottom-up security analysis, and it's super easy to look at a big bank right now and just do a discount cash flow methodology to find the current fair price of that stock. But when we're talking about companies in industries that don't even really exist or might not be fully mature yet, and you're looking at potentially a pre-revenue or definitely a pre-earnings company, how do you look at different metrics? What are some potential screens or initial bogeys that these stocks or companies have to hit just to slide across your desk?
Yeah, I mean, it's a good question. I mean, all type of investors, every type of investor is going to have different techniques and ways they go about things, right? So, even within thematics, you're going to have technical traders. You're going to have quant funds. We're, as I mentioned, I work on the fundamental equity side, and so in fundamental equity, fundamental analysis, yes, revenue is huge, right? Forecasting revenue is one of the key metrics that we try to do. That we depending on the sector, there's different ways that's done, right? So in biotech, we're looking at clinical trial results, payments. You might be looking at take rates and different trends around take rate. Software, looking at net ads over the quarter, how many new clients or new customers were acquired. At the end of the day, looking at all these metrics that are going to be very specific to the individual areas to really come up with an estimate of revenue and profitability, right? And doing some of that same DCF type of analysis that you mentioned with these kind of views incorporated within. But to your point, in terms of new themes, a lot of it's more art than science. Looking at things that are happening in the future that have never happened in the past, it can be challenging. From a thematic point of view, you can look to previous themes, but that's not necessarily going to be indicative of things that are going to happen in the future. So there's definitely science involved. There's definitely financial modeling involved, but there's also quite a bit of qualitative assessment analysis that help separate those who are navigating the field, with insight in mind against those who aren't.
So if we just dive into it head first, you just mentioned EVs. I think that's one of the hottest conversation topics right now, and plenty of people tuning in if they watch CNBC, if they watch Fox Business, if they're scrolling Twitter, whatever it may be, and looking at financial media. EVs are one of the most talked about subsectors of the market right now. On one end, you've got your Teslas of the world. On the other end, now you've got your Fords of the world, the traditional automakers that are getting into the EV space, and then everything in between. You've got your Fiskars, your Lucids. Give me an example using EVs. First, talk about the long-term trend there, kind of how that fits into the overall narrative of Megatrends. But then let's use EVs as an example of how you could get exposure to the EV megatrend using different types of companies instead of just buying, potential or current EV producers.
Absolutely. Yeah. So I mean, I'm very excited about the future of EVs. I think this is one of these things that's going to completely disrupt the existing model of combustible engine vehicles. They're going to totally replace combustible engine vehicles over the next couple of decades, and I think it's going to happen a lot faster than people think. Usually disruption is underestimated. If you look at past new technologies that came about, it's really a sharp line up once some type of critical mass is hit. It parallels somewhat with the smartphone theme that we've seen, right? So we think about thematic investing, and we can think about all these things that are happening today. We can also think about what's happened over the past 10 years. The smartphone theme that really came about in the late 2000s came with a new product that had new functionality that was just better, right? And we moved, and it got cheaper and cheaper, and we moved, from basically in the U.S. we moved from basically nothing to, plus 80% penetration in like 15 years, which is, it's amazing. All the different type of things and new type of companies that have came about off the ecosystem that the smartphone has brought. And then, why was it? It's just because it's at the end of the day, it's a better product for cheaper, or maybe not cheaper, but it's just a better product for what you get than the predecessor, the flip phone. The same thing is going to happen with electric vehicles. Over the past, they have been somewhat of a niche product, maybe a luxury product for some in some markets. They're getting to a point where they're cheaper, and they're not only going to be cheaper, they're going to be faster, they're going to be safer, they're going to be smoother, smarter cars that have all different type of functionality. It's a completely new product that's going to replace the combustible engine vehicle. And so, yeah, to your point, there's a lot of hype around it as well. Valuations are very high. So buying into the EV makers is not necessarily the only way to play it. You can also look into, those that are making commercial vehicles. There's commercial EVs. There's the micro mobility field, right? Those are making scooters and mopeds and whatnot that are completely run on electric power. There's autonomous vehicles, which is part of this story as well, right? So there's the autonomous players and all the different type of software semiconductor players that are tied in with that theme. You have the LiDAR, you have the battery makers, you have charging stations, the materials that go into all this. And then, moving beyond and beyond, we even have vertical takeoff and landing. So within this whole theme of transportation tech, which is really the electrification of transportation, there are a number of emerging themes within the theme itself that we're very excited about. And again, back to your question on passive versus active, there's ways to play it in both fields. There's indices now that are made up of really what I was just describing, because I'm in that ecosystem, and then there's active investors as well who have their their hand on the pulse and are tracking these companies and picking the winners and losers as they see fit.
I think that was a great example that really summarizes thematic investing in general that might have been abstract to people until we actually dug into it. Not just the producers of EVs that we all know, but also the battery makers, the semiconductor manufacturers, even the miners that mine lithium, that mine copper, those sorts of things. Another way to play, and I guess this would be the technological revolution mega trend, kind of a sub trend there that I want to talk about and just have you sound off on, is artificial intelligence and machine learning. Because anytime I think about the future and what could dominate the future, it's going to be everything that has to do with data. It's going to be everything that has to do with artificial intelligence. I'm hoping you could just spend some time talking about that area as it relates to megatrends, potential ways to get exposure to that megatrend that we might not be thinking of. We all know you could buy certain companies. We all know the Googles of the world. We all know the NVIDIAs of the world. But if you could just expand on how to get exposure to artificial intelligence and machine learning and what that future could potentially look like for all of us.
Yeah, absolutely. I mean, artificial intelligence is one of these things that just kind of transcends every single theme, right? And you think about every part of our lives are more and more going to be exposed to artificial intelligence, which is really just the advance of mathematics with semiconductors and next generation semiconductors and advances in software as well. So why is it happening now, right? Since artificial intelligence has been around for some time, there's been AI winters and periods of enthusiasm followed by periods where that kind of fell off. But we really did see three trends right now converging. One is big data, right? There's just so much more data. This is what artificial intelligence models need in order to advance. You have the advancement that we've seen, again, in compute power and storage that's been made available by the semiconductor industry that's allowing computers to actually do the type of processes needed to run AI models. And then you also have advancements in algorithms as well that software providers have brought forward. So it's everywhere now. People make fun of me, but I've mentioned before that chat bots are so much better than they were like 2 or 3 years ago. Like I used to hate getting a chat bot trying to get help on a website now. If I had some kind of issue, I'm saying 2 or 3 years ago, the past couple of months, I'm like, I actually want the chatbot because they actually can find out what the problem is faster than a person. And within Netflix, I mean, Netflix is an interesting one of how they've been using AI and how they've been advancing AI. Most people know that when you go to watch, you log into Netflix or whatever, you turn it on your TV. They're the suggested movies and shows and everything is AI. Everybody knows that, but they're also predicting what you're going to watch next, and then kicking off a download of that so that when you do click on that, it doesn't have any buffering, and they can kind of optimize for the video quality and give you a better experience at the end of the day. So, I mean, it's being used. I mean, these are some of the ways it's touching our own lives. It's also being used more and more in this industry with automation and robotics. Again, more, a lot around safety, especially obviously autonomous vehicles. This is a big reason why autonomous vehicles are pushing forward, is because they need very advanced AI, run on very big data sets. Organizations in general having a pulse on supply demand dynamics. I think the pandemic woke up a lot of organizations to say, hey, we have no idea what demand is going to be next month. Can AI help with that? And the answer is yes. AI can assess millions and millions of data points to help get a better idea of what demand is going to look like in the future. So there's so many different areas of the economy where AI is touching. I'd say in terms of companies like ones that are embracing AI, we believe are going to outperform those that aren't. Right? You can look at a lot of these trends. Right? You can see the companies that are pushing the way forward. Really the enablers. Right? So in AI, it's really the software, semiconductor, the specific plays that are being that those type of companies are making within the field. But you also have all different type of companies and how well they're embracing it, right? You can, again, I want to go back to 10 years ago, another theme, e-commerce, right? You saw certain players embrace it, others didn't, went obsolete. Well, a company like Walmart, right? Not necessarily a tech company, but they said, hey, e-commerce is coming. They did a lot better than Sears over the past 10 years. Not quite as well as Amazon, but have thrived in that environment. So we see AI as somewhat similar, right? You have companies that are going to need to embrace this. Those are the type of companies that we believe will outperform. And then in terms of getting direct exposure, a lot of it's within those internet, semiconductor, and software names that are helping push it forward.
So this next one, I mean, if we thought EVs were hot in the streets right now, let's spend a second talking about blockchain and Web3. I know there's a collective groan, everybody who just opened this link and is watching, because they know I talk about this stuff. I would love to hear from you about whether or not that fits into your Megatrend thesis, if there is room for blockchain, Web3. And you'll see in a second, we're going to talk about another, maybe we'll call this section real or fraud. Is this here to stay? Does this blockchain Web3 dynamic have staying power in, whether it's the technological revolution megatrend that you're talking about, or anything else?
Yeah, absolutely. Yeah. So I mean, so to answer your question, does blockchain and Web3 play into the megatrends? Absolutely. You know, we see this as an emerging frontier technology, and one that is going to have countless, you know, avenues going forward to play. I mean, I'd say it's still in early stage, especially on the Web3 front. We're in very early stages, right? So I think to some of those that might, you know, might be naysayers, like, you know, I don't think Web3 is going to affect the majority of our lives in the next couple of years. Like, it's not, this isn't going to happen like that. This is going to take some time. But yeah, we see blockchain as just, you know, it's an emergent technology that's come about, and it's really simple, right? It's just a public ledger on the internet, but it's paving the way for all types of things that are happening right now. And I'll walk through some of those, you know, including Web3, right? So Web3 is really, is emerged because, you know, it's been enabled by the blockchain, but it's really the idea that the internet of the future is going to be distributed rather than controlled by a single entity. And so you can imagine, you know, if we had a social media platform that was run on thousands of computers, and was adhering to a certain code, a set of rules, that might serve as a better model than a single entity, whether it's a government or corporation, owning everything. The pictures that you put on Facebook are owned by Facebook. You can't take them off. You know, you can take them off as a picture, but you're not. You know, they have those. They're on the platform. There's no transferability with other entities. Web3 is hoping to change that. You know, and so where we've seen today, right, we're in the age of big tech. This has really been, you know, come to bear because of Web2, where you have the, you know, Amazon controls everything that happens in e-commerce, and they're the ones that are going to take the profit from that. They own the cloud, AWS, and they're going to take the profit from that. You know, one day we might see a cloud storage service where we all own it together, and we all have that storage service, but it's not owned by one single entity like Amazon. So Web3, just, you know, they hope to bring down this model, this very centralized, controlled model, where a lot of the large companies have all the power on the internet, and it's being manifested in different ways right now. So one of them is NFTs, non-fungible tokens. You know, everybody thinks about digital art, digital land, and it's like, oh my God, what is this? But it goes way beyond that, right? And so this is kind of some of the initial ways that NFTs have been being played, is this, you know, this speculating, or, you know, buying and selling JPEGs. Beeple sold one last year for $69 million. He's an incredible artist, by the way, but there's definitely a lot of you know, meme stock type speculation going on with NFTs. But NFTs are going to have a lot of other applications. You know, gaming being one of them. So gaming NFTs are a huge trend right now, where we've seen this concept of play to earn emerge, where a game will create an NFT, so they'll have a coin that can be traded both by players and not, and it can be earned through the way you play the game. So, you know, you imagine you're playing a game, you get points. You know, in the old world, you get those points, and then you turn off the computer, maybe you save them, whatever, you have the points. Now you can get those points, you can turn those points into dollars, you can trade them. If you're really good at the game, you can earn money, and so you've actually seen people starting to make careers off this, right? This is an extension. This is not just Twitch and the esports creator kind of, you know, the phenomenon of people watching each other play video games. This is actually earning coins within the game, and interacting with the world that way, financially interacting with other gamers and non-gamers. You have music rights. Next week, I think, is going to be the launch of there's a company called Royal that's offering music rights to one of Nas's releases, and so this is a way for artists to directly interact with fans, not just sending messages and saying hi or whatever, but financially. A music artist can go straight to you rather than all the many different intermediaries that really existed. I think artists get 4% of revenue that's spent on music. music artists. That's on average. They get 4% of what you spend on music actually goes to artists. NFTs provide a way to just go directly to them, right? And it's also an avenue. There's an avenue for fans to bet or invest, depending on how you look at it, on your favorite artist. So that obscure artist that nobody knows about, that you heard the song, you think this is going to be a hit. Previously you could have told your friends, hey, like, oh, this is pretty cool. Now you'll be able to buy their NFT, buy their token, and if they blow up as you think they will, you'll be able to make money along with them. Another area I think is pretty exciting is the ticketing and events. Right now we have this pretty archaic model where you go on the Ticketmaster or whatever, you get your credit card, and they send you a QR code, and you bring the QR code to the game or whatever, or to the show, and then that's it, and then you leave and that's it. The future is just going to be NFTs. It's just going to be tokens that you sell, and then there's a wide array of functionality that provides, right? So one day we'll be buying and selling tickets to events after the show. So you go to the show, and then maybe 10 years later, I can sell you tickets to that show through an NFT. That not only provides function for you if you're a super fan and it's a collector's item, which maybe you can pay. I mean, we see that right now. You can probably find the actual printed tickets to some concert from the 70s or whatever that people will buy on the collector's market. But it also will provide functionality in that artists can drop assets, both digital and physical, to all owners of an NFT for a given show. It's like the ultimate email serve, right? It's like, everybody who went to my show, I want to give you like access to this new song. Boom, you all have it, right? And so that's worth something, and you go out and buy and sell that on the market. So this is just a few of the ways things are going. There's also implications in terms of fundraising. We've seen DAOs, decentralized autonomous organizations, have come around this past year, where early adopters can be rewarded, right? And so just this whole concept where you go from Web 1, which is AOL 20 plus years ago, which is just basically read. You have the internet, here it is, you can read what's on the screen. You went Web 2 that we've seen, the Facebooks, the Instagrams, where you read, you can write, you can interact with the internet in this way. And then now we're going to the read, write value, where a social media company pops up and you're an early adopter, and then you buy their coin, as well as you're a user. If that turns out to be a successful business like Facebook was, then you can also, hopefully profit in that as well. So there's a whole variety of paths that the blockchain and Web3 will take us, and I'm pretty excited about it all.
The tokenization of the world, as I call it. I'm biting my tongue because I mean, there were 9 different times I wanted to jump in there, but you said it as well as I've said it many times in the past. I'm sure if anybody has follow-up questions, they'll come and find me, and if I need to loop you in, I will.
Of course.
This brings me to this next conversation topic that people are sick of hearing about, quite frankly, because it's this all-encompassing buzzword that takes all of these things that aren't necessarily something and encapsulates it into the metaverse. I'm reading a book called Snow Crash right now. It was the first time the word metaverse was mentioned in literature. I think it was written back in 1996. It's a science fiction novel. I'm hoping you can talk about the metaverse, maybe what it is and what it isn't. And again, if there's room for the metaverse in this long-term thematic investing that you've been talking about.
Yeah, definitely has definitely over the past, we saw in October with Facebook switching their name to Meta. It's definitely been top of mind for a lot of folks. And what we try to do is just cut through the noise, cut through the hype, and see what's actually real, right? And so to answer your question, yes, it's absolutely real. This is incredibly exciting. It's the next frontier of the digital world. There's a lot of naysayers and there's a lot of hype around it. So that being said, I understand that. But this is the next iteration. This is a move from 2D to 3D, right? In the way that we all interact. I couldn't imagine that we'll be having this call in 10 years on a 2D screen. Like I just don't see why that would be. it's been around for years, the metaverse, right? As you mentioned, like, the word's been around since the 90s. But kids have been doing this for, the past 4 or 5 years. Like, adults don't even realize, but the games now, Roblox, Fortnite, these are all meta worlds that kids are interacting in. But really, I think a lot of the tension around this theme that's coming to bear now really has to do with we see it in three things kind of coming together in today's day and age. And one is the next generation hardware. So the hardware is advancing to the point where it is very realistic. I don't know if you've ever thrown on a headset, but like it can be. I mean, it's like nothing that I would have imagined when I first put on an Oculus. I'm like, feel like I'm falling all over the place with how realistic it is and how much you really feel like you're in the space. So there's this next generation of hardware that's making things just so much more adoptable for people who don't want the kind of clunky feel of how it's been over the past couple of decades. You also have the acceleration in digitization that we've seen in the pandemic, right? So the move more and more online. We took, I think, something like a decade's worth of digitization in a couple of months last year in 2020. So there's just a lot more users and just proliferation of the digital economy that we've seen over the past years that everybody is well aware of. And then there's a proliferation of crypto as well, which ties into it as well. So we see the initial opportunities within that next generation hardware. So you think about a lot of the companies that are producing the devices, not only the devices, but all the components, the miniaturized batteries, because nobody wants to wear a big battery on their head. You're going to need these tiny little batteries that are going to be able to have pretty strong power. And so that's where we see a lot of the initial opportunities, as well as in some of the semiconductor companies that are playing this theme. This is not going to be just gaming. I think that's another thing, we touched on.
Yeah.
How NFTs is not just about digital art. The metaverse is not just gaming. Like, I think it's going to go way beyond gaming. There's all types of applications, and we can't even imagine what type of applications we'll see in the future. But you think about golfing, right? An example, like, wearing just a set of glasses. Maybe there's sensors in the ball, right? And so when you hit your shot, you can see the distance, you can see the wind conditions all on your screen. You can see the trajectory of your shot. This is obviously an advancement in the common human experience, at least within golfing, and this can be applied to all types of sports within the professional sense as well, right? With shows, again, sporting events, you don't need to actually go. You can just do it from your living room, right? Like, I haven't done it yet, but I'm a big basketball fan. I would love to go to a courtside game with the headset on once the tech gets there, that makes it to make it able to do something like that. There was a concert, I think last year, it was like 78 million people went to Ariana Grande concert. I think she did it over a couple of days, but where in the world are you going to get that type of audience to do a concert? And it's obviously not going to be the same thing, but it is going to serve a purpose. And so Facebook, obviously, they think that a billion people are going to be tapped in to the metaverse by 2030. They're spending a lot of money on it. And so, within that, where we see them spending money and other players spending money as well as they build this out, that's where we see a lot of the investment opportunities. So in the picks and the shovels, right, the batteries, the chips, the lenses, laser tech, the components that I mentioned. And then also, another aspect is, I touched on this a bit before, and just the companies that embrace it, but the luxury brands, the beauty brands, the fashion brands that embrace this type of technology, we believe will outperform. Obviously, one problem with the 2D internet world that we live in, with fashion at least, like, you can't try on clothes online. Like, I'm sure that some website does it, but
Yeah.
but nobody's doing that. Like, you can't try something on, and that's why really, a lot of folks go into the store to try it on. In the metaverse, we're gonna get to a spot where it's pretty realistic, right? Where you put on some shoes, walk around. It's gonna get to a point that is provides utility in trying on new clothes. And so we think that those consumer brands that will embrace this world have a better opportunity to outperform those who don't.
It's crazy. I mean, all these topics, I kind of get goosebumps thinking about. And we were talking about this on the pre-call a little bit, but I think people in our generation have the benefit of having that kind of 1 foot in, 1 foot out experience where we were part of the pre-digital era, but we also, have fully been career people and been students and been younger people during the digital generation as well. It's an interesting vantage point to be sitting. I wasn't going to talk about this, but I actually listened to the CEO update from Larry Fink, the CEO of BlackRock. I think it was on Wednesday. And he said, and these are his words, I'm not going to quote him, but along the theme of he thinks carbon capture is going to be the biggest problem to solve over the course of I think he said the next decade. It might have been the next couple of decades, which brings us to the climate change mega trend. It's a huge bite of the apple to take off right now, but because we were talking about different pieces of technology, essentially, now we're talking about climate change, this big behemoth of a mega trend. What do you see as kind of the sub sectors of investing in this climate change revolution that we're undoubtedly going? I mean, we're a part of it right now, but that we're going to see over the course of the next many years.
Yeah, well, I mean, for one thing, I think it's hand in hand. I think that the ways that we're going to be able to get to net zero are heavily dependent on advances in technology, right? So carbon capture is one example. It's going to be, there's going to be all type of technological advances that are going to help get us there, right? So whether it's through solar, just getting more efficient through solar and storage, whether it's carbon capture, and not only carbon capture, through kind of the way people think about direct air capture and just taking it out of the environment, but actually putting it right next to the plant. So oil companies that are investing in carbon capture are actually, where the most acute gain can be made. But yeah, there's a number of themes, and we think about resource efficiency, just making our buildings. We need to update our buildings to make them more resource efficient. We talk about things like, things that maybe are outside of the minds of most sustainable energy investors, but ways that we can better recycle and create a more circular economy. Food production. So a lot of there's firms that are innovating around food production, whether it's creating food, but also just doing so in a much less resource intensive way. So there are all types of ways that I think advances in technology are helping bring forward the solutions that are needed for really is the problem of our lifetimes. I think that we'll be having these type of discussions for the rest of our lives. But I see it as a huge opportunity, right? We could be the generation that helps turn it around. I think it's possible. I'm pretty optimistic about the future, especially when you see some of the advances that we've seen over the past decade. I think that we'll continue to see things like this, and we just have to keep pushing forward. I think that one of the main challenges to this whole thing is just global coordination, right? Just getting everybody on board and setting incentives in a right way so that both public and private investment could be made in this space.
Sure. Yeah, no, I think you hit the nail on the head. The incentivization is huge globally because fixing the problem is one thing, but fixing the problem without all sorts of adverse consequences, whether it's displacing massive amounts of people, hyperinflation in certain areas, because you can think of examples where solving carbon just in general would lead to things like that. I'm going to put you on the spot here because I just kind of thought of this question off the top of my head. So
sure.
You can always edit this if it doesn't work out. Can you think of any examples of like the opposite of a mega trend, things that you see completely going away. Not saying you would necessarily short a mega trend or anything like that, but examples of things that were behemoths in previous generations, but there just aren't necessarily room for moving forward.
Well, I mean, you can think about, you can think about the adverse side. The way that I think about that question is really thinking about the companies that are not going to benefit from the things that are happening, right? So these things that we've been talking about are going to happen. And so mainly, I mean, I talked about a little at the front, but really the companies that are not embracing the trends. So like, think about, I used the example before, but think about Sears. Sears did not believe in e-commerce. They did not embrace it. They didn't invest in it. And look what happened. I think that every company out there needs to really assess all of these trends, some more than others, and really think about what their next 10 to 20 years is going to look like. That's really the way that I would consider this. And so I think that within every industry, right, you can apply it. The energy companies out there, the oil companies that are responsible for a lot of the emissions, the utility players as well. Some might look at climate change and say, hey, let's sell energy. Let's get rid of all these. Like, this is not adhering to what's happening in the economy. But the truth of the matter is that some of these players are investing heavily in green energy and carbon capture and things like that we've mentioned. A lot of them are modernizing their grids and doing all types of things to embrace reality, right? Embrace what is actually happening, and to avoid becoming a thing of the past, right? And so I think within every single sector around across the board, you can really think about it in that way. Which companies are embracing reality and which ones are stuck in the past and not innovating and not changing fast enough? Which of these companies is not dynamic enough to take advantage and invest along those lines? That's really the way I would think about some of the, call them anti-megatrends, if you will.
So I want to tie this all together because the people listening in right now, they're investors. I want to tie this into how this affects investors. And I think an interesting place to go with this would be over the course of the last 12 months. And this isn't going to apply to all sorts of thematic investing, but if you look at some of the AI-driven robotics, they not technically, but generally, a lot of these long-term themes will fall into higher beta, growthier, more stretched valuation type companies. So we've seen softness in as far as market price goes and share price goes for these types of companies over the past 12 months. What do you say to the investor who has a portfolio that's heavy in long-term thematics, a lot of the topics that we just talked about, but maybe you're down 20% over the past 12 months if they're super overweight to some of the higher valuation? Do you pay attention to macro conditions, the Fed potentially raising interest rates over the next 6 months or so? How do you view macro and how that ties into the overall investor experience?
Yeah, I mean, I think it's a good question. It's a very topical question, and I'm looking in the mirror when I'm talking to that investor because the majority of my portfolio is in this as well. So I definitely have felt some of the pain that really these type of strategies, really any high growth strategy over the past year has been a difficult period. I think every investor needs to take macro into account to some degree. You can't just ignore it, But I do think it matters a little bit less here than it would for a different asset class or type of investing, a different risk profile. Like a lot of the things that we're talking about, AI, EVs, climate science, like if rates are 2% over the next year, right? The rates are at like 1.7 right now, I think 1.75. If rates move to 2, or if they stay at 1.7, or if they go to 2.5, is it really going to make much of a difference for all of these themes? Like the answer is no. Now there could be repricing, right? And then there's always short-term repricing because when you're thinking about cash flows from 2030, you need to discount that, and if the rates go up, then the value of that goes down. So there is repricing dynamics involved, but the type of returns that that we expect these themes to play, they outweigh any type of risk from this type of repricing that we can see. I mean, so I think it really depends on the investor, right? You know, if you need your money in the next year, if you need the cash, you're short-term investor, if you have liabilities, then you know you need to take that into consideration. For somebody like me, you know, I'm planning on investing for the long term. You know, I'm not investing in thematics with any dollars that I need in 2022, and so I am not paying attention to the same degree, or at least not worried about rates. You know, I do think, you know, everybody needs to constantly take in new information, determine what's important, what's not. If it changes your perception of reality, then maybe you want to change what you're doing. I think this goes with any type of decision making, to be honest with you, not only investment decision making. But if not, I'm not too concerned about it. I don't think selling just because something has sold off is a valid reason. And I'd say, given what we've seen in the past 3 months, year, the fundamentals have been incredible, right? And the trends have continued. What's really changed is inflation expectations and interest rates and investor sentiment, right? So there's more fear out there, but you know, some of the times the best times to invest is fear. I wanted to give you this one. I want to paraphrase. So I read a Howard Marks memo that he put out recently, which I highly recommend. I'll send it to you so you can post it in the notes. But it's just around kind of this idea of selling off with high risk names, right? So his example is Amazon, right? This is the most, you know, in hindsight, obviously, right? Who would have known Amazon? But I'm just gonna read it off right here. So everyone wishes they bought Amazon at $5 on the first day in 1998. Since then, it's been up 660 times to $3,304, right? 660 times your investment, right? Incredible. Obviously, again, in hindsight. So, but who would have continued to hold the stock when it hit 85 in 1999, up 17% in less than 2 years? Obviously, this is the flip side of that, right? We talk about selling when things have sold off, but what about selling when it's gone up? Like 17 times my money, like maybe I should get out. Who of those who held on to the stock would have been able to avoid panicking 2 years later in 2001 when the price fell 93% to $6? Your stock sold off 93%. You know, can you imagine kicking yourself if you sold Amazon? Thankfully, I wasn't in my investing life at that point, but down 93%. It's incredible. And then who wouldn't have sold in late 2015 when it hit $600, up 100% from the 2001 low? Yet anyone who sold at $600 only captured the first 18% of the overall rise. So it just gets back into the point. I mean, you're investing in a company like that in e-commerce and in these long-term trends. It really pays to just invest for the long term and to avoid kind of making decisions based on price moves.
What a tidbit to end on. I mean, there's someone in particular listening in right now. I'm going to tell them to start by actually fast forwarding to this part and then watch the entire thing. They know who they are. We just talked about this today, but Sam, this has been fantastic. It lived up to all of my expectations. I have a feeling that you and I will probably be sending some emails back and forth over the course of these next few months as things do remain choppy, I'm sure. But I just think we share a similar sentiment. I can tell you're excited about the future, where all these mega trends could potentially head. I know I am too. Thanks so much for taking the time. On behalf of all of our clients as well, thank you so much for taking the time. Sam McClellan of Blackrock.
Absolutely. Thank you, Jordan. Really enjoyed this. Really enjoyed the conversation. Obviously, I like to talk about the subject, so always up to getting back on the phone at some point in the future. do it again.
Fantastic. Safe travels. We'll talk soon.
Appreciate that. See you,
Take
Jordan.
care.